Good morning, ladies and gentlemen. This is Clueless 8, and here's a quick 15-minute video cast on the current state of the markets and what we're going through. We have had multiple winners. We have had tremendous winners in the forms of the Amazons and the Netflixes, the Googles, you name it. And we have had some powerful winners away from that side on a bunch of smaller cap stocks too. For example, Jack in the Box, CAB, that's Cabela's. We have had winners we are seeing right now up 24% on PBMD. There's a whole slew of them. Keep in mind something very important here, and I've said this over and over again, but just like every other human being, humans don't get it till they finally get it, okay? I finally got it, and that happened to me a few years ago, not too long ago, where you just see the light of understanding that volatility, the nature of itself, is volatile. So you have to adapt to the circumstances and then readapt. Now, if you're not prepared to do so, then do not trade actively. Buy these swing trades. I called them 2 weeks before and they get there. I mean, every one of my charts from a few weeks ago got there. So the bottom line is that if you're going to be an active trader, whether it be intraday or over a day or 2 or 3 days, you have to, honestly speaking and very directly speaking, wake up. You have to wake up to the fact that trading in essence and investing to a certain degree, trading primarily, is not a binary event. Now, what does that mean for people who are not very well versed in the English language? Binary events are things where just 1 + 1 = 2. Linear, straight. Okay, market's here, it's going straight up here. Let me say something. Let me show something. And it's so obvious, like they say, it's hiding in plain sight. The market was in 1998. We're up we went thousands of points higher here to 21 and change. All structured, all shown on my charts, okay? Did it happen in a straight line? That's all you got to ask yourself. So let's not fool each other, okay? If you can adapt to the volatility like I have, you tend to do well. You're consistent. You get some big home runs, you get some small ones, you get a couple of losers, and you know what? Net, you stay ahead. It doesn't mean your P&L has to be green every single day. It doesn't mean you have to cry like a baby every time the market's down or up if you're short. That's okay to vent, but don't go overboard. And that's direct, wise wisdom coming from somebody who's had many losses in their trading career, investing career, far more than most of you have even understand or comprehend. Okay, and I'm telling you that straight out. Through all that old saying, it's not the number of punches you throw, not the number of home runs, but how many times you get up to stand for the fight. If you can't do that, don't do this. That's it. Now let's get into the technicals. So we have this straight line here. It didn't happen in a straight line. We went like this. Whoa. Is that a binary event? Yeah, the binary event was if you bought it here and you closed your eyes and you said, okay, Clueless 8 has shown these charts. They're going to go back to the highs. It looks like a massive pattern symmetry, and I'm just going to hold on, not look at my P&L for the next 2 weeks. Well, yeah, that's a binary event. Can you do that? I can. So don't fool yourself again, all right, please. So the bottom line is that it doesn't go in a straight line. Then we are in this trading band here. Okay, upper end of the trading band we reached. We created this was the major resistance here at 2109. Same type of level we reached on the futures. Same thing with S&P 500, obviously. Big move down. The frigging, I call it terrorist attack. Okay, that I don't even want to go there because it just boils my blood. Okay, I'm tired of all this garbage that goes on, all this religious fundamentalism on both sides. But specifically on one side, okay? I don't want to even get into it. It just makes me sick, all right? Any type of extremism is bad. I don't care which way it's coming from. So this type of unbelievable stuff and the tragedy that happened, and that was the drop yesterday, okay? And technically the market's reset. So then this line here, let me get these lines out. Then I drew this line and I said clearly on the Periscope broadcast that, look, these were the Monday's low. There's a good shot that we'll hold there. Well, it's a good shot that we held there. We held there and we made an overnight move where futures up here were up about 12. Now, I'm not a futures trader and I wish I was. In fact, I will be very shortly. I could have taken out 12 points. Okay. Can't cry over something that, I'm not able to do right now, or I haven't, I don't actively do. I'm able to do it. I just don't actively do it. So here's a plug for my friend KG Trading. He is dying to do these futures lessons. If people are serious about it, I'll take a short list. I'll tell you what the cost is going to be, and he's going to spend some serious time working with people on a 4-session basis to teach everybody about futures trading. Okay? Just like every one of my costs on my service, it's going to be nominal. So just passing it on to you. In the meantime, the markets pulled back on the Draghi comments, and we came and hit, guess what? The lower Bollinger almost hit this, which would be nice right there, which was the lows from Tuesday, last Tuesday. Okay, last Tuesday. So these were this Monday's low, and this was last Tuesday's low. And that was also a right shoulder. Remember left shoulder, right shoulder I kept on showing? This is inverted head and shoulder. Well, we could come down here. It could create a multiple right shoulder. So it almost got there, and now we're bouncing. So let's see what's going on here. Because this is a live chart, so it's moving. So this is what's going on. So there you go. All right, so this line should hold. If it doesn't, we'll adapt. Wake up. Then that means we're going to come down to 2064, and then we'll see what happens. In the meantime, I've mentioned this before, and I'll say it again, that when you look at these McClellan oscillators on the 1-hour chart, which is really the trader's charts, we're at minus 400. That's a pretty deep capitulative type of move. Okay, I'm looking at my screen on the right hand side. I see a lot of green. Now, one of the best things that I'm going to show you today is with the US dollar collapsing, it's great for commodities. Okay, it's great for commodities, and we are starting to see oil move up sharply, and of course commodities include gold, fertilizers, you name it, right? So guess what we have? We have Mosaic, MOS. So at this point, from a broader market perspective, I'm not seeing any big, large greens on my. In fact, I'm seeing very almost no reds on my screen, other than GoPro, which I don't even look at. And what else am I looking at? Shack is down a penny. Everything is green. It's funny, huh? Futures, everyone's just, excuse my French, shit scared, terrified again. Terrified of that huge unknown. Well, get to know it. I'm telling you what the factors are behind this. Now, Mario Draghi's comments, which are driving this thing here, he made some very big policy moves, and I want to get into it right now. It takes time. You have to understand a little bit. I'll put up the article there, read it, and then take a refresher course at Princeton or Harvard on macroeconomics. I'm just kidding, but seriously. He cut the deposit rate. So in other words, you put money in the bank, it's going to cost you money for the bank to hold your money, okay? And I believe it's at minus 0.3%. So you put in $1,000, they're going to take out $30, from you or something like that, just for holding the money. Great, forget about interest. He's pushing QE to the biggest degree. What he didn't do, he didn't raise the amount of QE. It's 60 billion, I believe, a month. He didn't move up to 80 billion. In my opinion, the initial disappointment with the market. So why didn't he do that? Well, I think it's good because he's explaining now in clearest terms that he doesn't need to increase the asset buying program from 60 to 80 billion because that connotates some massive hidden danger that's out there. But of course, if you listen to the dogmatic bears, they'll tell you there's such hidden danger out there. It's not even funny. Look, I'm a tactical bear. I do expect the market to pull back. I've said it before. I'll say it again. We're probably going to get a 300 or 400 point pullback next week. Okay? We're far from a bear market. You don't get into bear markets with central bankers or banks around the world pushing liquidity and trying to achieve growth. Ever wonder what happens if China's numbers actually turn higher? Ever wonder if Europe numbers start over the next couple of months to look higher? Think about that. We all know what's wrong. Do we know what might be right? So let's not get into that economic analysis back and forth because I'll beat the pants out of anyone on that. I'm not overtly bullish, but I still believe that from a standpoint that sentiment is so heavily negative. And you can see that manifest itself in the form of Wall Street analysts, in the form of traders everywhere, including in our space at the Clueless State Trading Club. Many are overtly bearish, which is fine. You need both kinds to perform in this market, bulls and bears. So I would think that, and given the seasonality, don't forget the seasonality. We're in December here. Okay? We're not going to kill December. They're going to make sure December goes okay. And after we get these corrective pullbacks, okay? Remember last year, Santa had disappeared. All you kept on hearing from the markets, from the media, was Santa's gone. And then Santa appears in the middle of December, and we have a face-ripping rally that just goes higher. Anyway, so this is the daily. Now, my trained eye or untrained eye, whichever way you look at it, looks at this as structured volatility. You can see that clearly if you just focus a little bit, honestly. Focus is worth money. So why not focus a little bit, okay? Instead of getting your EQ or emotional quotient out of control. So if you focus on this, we're not seeing any big dramatic moves. We're in structured volatility. All the levels have been marked for everyone's ease of use. People say, "Oh God, we're gonna move, we're gonna fall. We're turning. That's it. It's the beginning of the bear market." Well, in that case, don't trade intraday. Buy puts out 6 months and say, "Okay, it's a bear market, and we're gonna go down here." And the chances are we might. But the point is that if you want to make money on a daily or a weekly basis, you can't be keeping your eye on the horizon that big that you're going to crash on every single tree that's in front of you. In other words, if you're driving on the road and if you don't keep your eye in the cars in front of you, and you want to keep your eye 10 miles ahead or try to look 10 miles ahead through a binocular, you honestly think you can drive the car? Think about it for a minute. Seriously, think about it. So when people come to me and say, "Oh, this, look at that, it looks really bad, it's going to turn." Okay, I understand. I understand we could be down 1,000 points, going into January, but does that not mean that we can make money now? We are. We are. So that's really what I'm getting at. So at this point, the low end of the scale is 2062. You can see that what we are doing here is actually. I'm going to move this line out actually. One second. What we're doing here as we zoom in, and don't forget, these were those classic double bottoms that 99% of traders never bought. And we did. Well, some of us did. Okay. So at this point, what the market is doing is it is looking to the retest of 2066 on the E-minis would be a retest of the this is the daily. So I'm going to I'm showing you some broader picture. You see the lines here. As long as these lines are pointing up, I teach all these in the group coaching sessions. So for God's sakes, put in a few dollars and take the group coaching sessions so you're not lost all the time. Many of you are. I can see that. So bottom line is that as long as these lines are gapping up, and as you can see, they're moving at a nice angle up. Trajectory is still up. This is the primary trend, the 50 and the 34 lines. They're moving up. That's what's called the primary uptrend is in place. Here was the crossover. Okay? And despite this drop in the market, the primary trend, which is manifests itself in the form of moving averages, continue higher. So we could come and test 2066. We could even come and test 2030. Don't think that's going to happen today. But the bottom line is that the primary trend still remains intact. When you start to see on the dailies the first signs of a curve down at these lines turning south, that's the sign that big money is leaving the table. Okay, that's it. Enough for that. Have a great day. Great multiple varied sectors recommendations are in play. So stay focused, study, and stop getting way too emotional. All right. Thank you. And say a prayer for the victims in California. That's a tragic story, and I'm glad that that the perpetrators were eliminated. Thank you for listening.